Hi, welcome to our YouTube channel, Rehan Talks. So today we will learn an option trading strategy. We know that most of the time we have seen that option traders are struggling to make money. And the biggest problem with that is they are not following the rules, which I have understood. Following the rules and consistency are the two important aspects which could help. Now, for the consistency, I cannot help you out with that. But for the rules based trading, I can sure do. So today we will learn a strategy which I have been testing for the last 6 months and it has given a positive results. I'll show you the results as well so that you can see for yourself and then we will proceed to learn what are the rules for trading. Now, this is the strategy which I have named as Super Sensex. This strategy has been under testing from the August of 2025 and this is the equity curve which it had generated. We require a capital of 2 lakh to trade. On this, it has traded for 151 days, so almost 6 months have passed. It's an intraday strategy, so you will start in the morning and will close everything by 3:20 in the evening. So there is no carry forward, and we will be picking up the trends during the intraday moves. The strategy has a win rate of 56%. So, but important thing is if you are able to make more when you are gaining days, you are able to make profits. So this is what translates into an ROI created of 35% and Sharpe ratio is around 3.77. If we pay attention, what is the monthly returns and how it has panned out? So first month, it was not a full month. So we have a negative return. For rest of the months, we can see that strategy is able to generate profits. Important thing to understand, the strategy will not generate profits in every month. So in the month of August, if there is a more sideways move, then we will having a lower chances to generate returns. So we can see that on month of October as well, we didn't made any enough money. The strategy could go negative as well. And these are the testing results. So expect some slippages when you are trading in a live scenario also. Now, when it's a trending moves. So on those months, this strategy works very well. So in month of September, November, December, and January, we actually saw very good results. But in month of February, when again we are looking for a trend reversals, this is not a good month for this trending strategy. So this is how you can use this strategy and could able to improve as you start learning your process and developing the product according to a usage. Now let's see how this needs to be done. What are the rules behind this strategy? So you can adapt it according to your requirements. I have named it as Super Sensex. Simple and intraday framework. Systematically, will be evaluating based on the data and then taking the trades, followed by the consistent trailing stop losses to protect our profits. So first of all, I narrate the rules. The rules are like this. Core idea is sell the ATM straddles. Oh, sorry, sell the ATM CE and PE. That is trading below the super trend. As it's a trend following strategy, not a sideways move, not a non-directional one. It's a capture a direction one. So we will be selling either a CE or a PE and not a straddle. Now time frame used is on a 5-minute chart and we will start the day around first 5-minute laps 9:20 in the morning. And then when we trade, we have to trail because we have to protect our gains. We cannot sit idle and we will be tracking based on the trailing stop loss mechanism, which will help out in taking out the profits, whatever we have in case there is a reversal during the day. Execution rules are simple. We have to start at 9:20. First of all, we have to look at what is the value of the Sensex at 9:20. Then we round it up and down to get the ATM strikes. We apply the super trend settings of 21 to 2 on ATM CE and ATM PE. Now, entry rule says if the CE is trading below its super trend value, we will take trade on that side. If PE is trading below its super trend value, we will take a trade on that side. But there is a chances sometimes what happens is the sideways day starts. Now, at that case, you will see that the CE as well as the PE are trading below their super trend values. So in that case, we will not be able to get a clear trend. So in that scenario, what we will do is we will correlate the data with the Sensex. If Sensex is trading positive, we will go for selling the PE. If the Sensex is trading negative, we will go for trading the CE. Idea behind the logic is we are trying to find a trend and ride that. So we will not take a counter trade. So we will assume that the trend will pick up during the day or stay as is. So we will keep following the trend, whatever Sensex is telling us. Exit position is the stock trades will be exited either at 3:20 in the day if there is no stop loss required, and otherwise the stop loss will be booked if the super trend 21 to 2 is reversed. So red to green. Now important thing is here we are applying the super trend on the instruments CE or PE, not on the super trend, because we have to trail the CE and PE. So we will be applying the super trend on CE and PE to get our exit rates. For hedging, you can do that plus 20 OTM strikes you can buy for CE or PE for whatever trades you are going to take based on the direction for margin benefits. These are hedges only for the margin benefits as it is going to be a far away. Nearby margins hedges are not required because we are taking the trades on a day basis only, as there is no overnight carry forward. So we don't actually need the hedges. Most of the time we will be taking the stop loss based on the requirements. Now, re-entry position is allowed. One re-entry on both sides is possible. So assume that the day started on a positive note. So we sold PE and then it took the stop loss. But again, after the reversal, the day again picked up a pace. Then we will go for selling the PE again. Another scenario, if the reversal happened and there is no second reversal to pick up the trend, then in that case, PE trade would have been exited and we will enter the CE trade. Now, important question right now is why we are using the super trend, which is 21:2, and why not a default settings of 10:3. The reason is 21 period will give us a more smoother trend. So, and also lower the noise in the data. 10 period is a small time period. So when we go for 21, we are enlarging that period, which will help us in more smoothing the trends. Multiplier 2 is used because 3 we have seen that is giving a high bandwidth. So range becomes larger. So when the trend reverses, it becomes a late exit point when we are following the 3 as a standard deviation factor. So rather going to a more practical purposes, we will go for 2 as a standard deviation in this case. So settings has to be changed from 10:3 to 21:2. Now, first of all, I'll show you how the setup works. You go to a Sensex. This is the data from yesterday. As you can see, the Sensex chart is there. I have applied a super trend as well as the VWAP line. VWAP line is blue and the super trend, as you know, red is for bearish, green is for bullish. Time period is 5 minutes. And as we started the day, we can see the first candle closed in the green. So there was a positive bias. But as the yesterday it was not a negative mood, so that's why the trend is showing as negative. But soon, just at 9:35, we can see the trend shifted to a bullish mood. Now, first step was at 9:20, you need to identify the strikes. So I have marked the blue horizontal line here. You can see that level at the marking is 82,447. So it gives me two strikes which are nearby, 22,400 and 22,500. Then we will open the chart for these ones. Most of the brokers are providing this facility that you can open the charts side by side to have a better comparison to decide. So I have opened 82,500, which is the first ATM, or you can say in OTM on a call side, and 82,400 on a lower side, which is put. Now, logic is same, apply the same indicators, introduce super trend 21:2 on a 5-minute time frame, and this is how it looks like. You can see that just at 9:30, the super trend on the call was positive. So this just confirms the bias which created by the Sensex as it started the day. And then at the same time at 9:30, the super trend on the PE side went to the negative range. So this gives us an indication that we need to trade put on this side. Now, as the candle closes by 9:30, you can see the price was hovering around 436. So this becomes our entry price. You can see that I have marked even 463 line, which is for the first level, which is candle close at 9:20. But after that, as the price didn't move down, so we could not able to take a trade. But when the super trend actually changed at 9:30, it gives us a confirmation. Also, the Sensex super trend moved into a positive zone. So bullish confirmation was confirmed and bearish put instrument was to be traded. You can trade the trade around 430 levels, and then you can see the trade went up to 1240 level or 1240 p.m. in the noon, and then the reversal came and we could able to exit at 350, 325. So this trade could have generated more than 100 points on a single day. Now this is the whole strategy. I have told you the rules. I have told you the implementation. You can see that how simple is it. We need not to complicate the things. Let have the simple things. Make easy trading game so that you can execute it properly. Now, I have already shown you the results which are in the past. Meanwhile, I'll also show you some of the more results so you can have a more understanding of the product and how it is being used in the historical ways. I have taken a snapshots from the previous days on which the similar thing has happened and how the trades rolled out. We can see on the screen right now, 23rd of Jan, we were trading around 82,400 CE. As the trend was negative, the call went into a bearish mode and the trade started around 560 just at 920 or 925. We can see for the rest of the day, the trade went down. There was no reversal during the day. If there is no reversal during the day, you can see if you have sold around 520 levels, you can have easily closed at 290 levels as the super trend changes later on. In this way, you could have captured around 200 points on this one trade itself. Then an example from 28th of January, here we have traded 2 times. So first entry came in at 918. Here it is. The entry was around 280, but we can see that the day went sideways and we were not able to make any money. And that's why we have to close the trade at 320 only. So it was just around the starting point and we closed at the same level as well. But as I said, if the trend continues and reversal happens, then we can have a re-entry as well. So the trend again moved up and the Sensex moved up and the put again went into a negative zone, and this happened around 230. At the 230, the entry price for this instrument was 360, and then you could have later on traded till the day and closed at 160. On 28th of January, we are trading around 82,400 and strike. Again, the 2 entries came in. First entry was around 930, around this level. And then it has to close because the reversal happened. But again, the trend followed in the original direction and the re-entry came in at 1140. And for the rest of the day, around 2 p.m., we could have exited. The entry price was around 250 and we exited around 175. 29th of Jan, we have an example on 82,000 PE. Entry came in early around 10:30. For the rest of the day, nothing happened. It was an expiry day. So you can see that the price actually went to zero. So closure was at 3 p.m. Then on 6th of February, you can apply the same logic onto Nifty as well, because sometimes people are trying to get more and more theta. So we have 2 expiries during the day. So what you can do is on Monday and a Tuesday, you can apply the same logic to Nifty, and on a Wednesday and a Thursday, you can apply the logic to Sensex. The choice is yours. If you are comfortable with trading only a single index and want to make an habit out of that, you can even trade Sensex all days. On 6th of February, I have an example from Nifty where 25,600 call we sold. This is the blue line. And then we have to take an exit because the reversal happened around 11.5. The second entry came in around 12.5 because again, the trend again picked up the original ways. So the entry again came in at 120 and the closure was below 100. On 16th of February, 85,500 PE was to be traded. See, it's a smooth move, one-way direction. You could have started the trade at 360 and have easily closed at around 240. Then on 17th of February, the trades are already marked. 83,200 PE was sold at 321 and we closed it at 229. 18th of February, this trade was very smooth on a one-way side. The entry came in around 10:55 or 11 around 297, and for the rest of the day it went to a zero. Oh, sorry, it went to 105 as the day closed. There was no reversal later on. And this is the position which happened on 18th of February. 83,800 call, no reversal, only a single trade. The strike which could have been sold at 100 went to 0 for the day. So I have already shared the rules. I have already shared how the strategy could perform. You can execute it as well as your comfort zone is concerned. You just need to understand the rules and follow it. For better understanding, I'll repeat again. Execution is like at 9:20, we will figure out what is the level of Sensex. At 9:20, what we'll figure out level of Sensex. Then we mark the level and get two ATM strikes, CE and PE, by rounding off the data to nearest 100. Entry rule says if the CE's instrument is trading below super trend, sell that. If PE instrument is trading below super trend, sell that. 21 to 2 becomes a natural stop loss, trailing stop loss mechanism, and exit when the super trend changes again. You can buy the hedges 20 OTMs for the margin purposes. No need for to have a closer ones because this is an intraday trade. So we will not be trading for the day. The super trend will give us an easy exit, proper exit when the trend reversal happens. So this is how you can use it. I hope you like the strategy. If that is the case, I would request you to subscribe to our channel and also press the bell icon so that whenever a new video is uploaded, you can learn it. In addition to that, this is a one strategy which I am trading. I have also created a option trading full course. So if you really wants to learn how to do an option trading, I can help you out with that. So in that full trade, we will having around 3 option selling strategies. We will learn 3 option buying strategies. Apart from that, we will also be learning various concepts which you should learn as an option seller or an option trader, because understanding the concepts helps you out in framing the most strategies as per your convenience. So in that course, I'll teach you how to read the Greeks, what is the interpretation, what is the impact it generates on any option trading instrument. Then we will also learn how to use the option chain data. Option chain is a very critical piece of instrument. Many call it as speculative, but you need to understand that it is not only speculation, it is data-based speculation. So data backs out your decision making and helps you out in taking decisions. An option chain provides us every information which is available on this platform, including the open interest data, changes, what is the put call ratio, how the trend is moving. To find it helps you out. I will be posting the link to that course in the description for this video. I hope you can use that video and make your learning experience more better and become a full professional trader by attending that full course. Thank you for listening. I hope you like the video and you make sure that you share it with your friends as well.